Good morning, traders. I'm Michael Sabo, Senior Market Strategist here with RJO Futures on February 10th, bringing you some commentary here in the energy market. So let's get started. Well, crude prices here this morning were just a touch firmer. We're up about 18 cents at March contract trading just over $100 a barrel. Kind of been, above it and below it, kind of a back and forth, but fairly quiet session here in the overnight into this morning. Brent actually a little bit weaker. It's off about 38 cents. We're trading around 109.19. So we've really seen that spread widen up quite a bit. Some opportunities possibly developing there. If you want to learn more, give me a call and we can get into detail on how to play that. Nat gas. That's been pulling back here a little bit. What a volatile ride we've seen here over the last couple of weeks. A lot of opportunity there, but certainly not for the faint of heart. Currently this morning, we're off about 2%, down about 8 to 9 cents here. March contracts trading just under 470 here. So seen some big swings there. But again, you want to talk about some opportunities there, give me a call. We can get into a little more detail. Complex, quite a bit weaker here. RBOB's off about a penny. Heat's down about 4 1/4. So certainly seen a weaker tone there. Now, let's talk about Friday's action here in the crude oil. As many of you know from watching my posts, I have been a bit bearish on the market. Friday, outside day, market kind of breaking out and pushing higher. Now, it doesn't change my opinion of the market, though. It's how you play that and the strategy that you're using to try to take advantage of it. That's where you got to be careful with here. But let's delve into this here a little bit. We saw the numbers come out, the DOE numbers come out there on Wednesday, and we did see a little bit of a build, although not quite what traders were anticipating, but nonetheless a build. Look at total stockpiles. Again, my opinion is this. I think the market's got ample oil out there. What we did see, though, following suit was that the market was kind of moving along with the equities markets, which, of course, has been a firmer tone. And something I had mentioned in last week's post was to watch for the jobs report on Friday. And I certainly think that helped kind of set the tone, the overall market, and helped push prices higher. Now, if you look at the market on the technical side, though, the market is really now approaching a double top. You look at where we're currently trading at. These are the levels that we were trading at around December 27th, where we hit a high of about $100 a barrel and about 79 cents. 8 days later, we saw crude prices fall substantially down to around $91.50 a barrel. So at that time, the market was kind of climbing higher, and traders were wondering what was going on. And then it was as if all of a sudden everybody woke up, looked at where the inventory levels were at, and decided that crude prices didn't belong at these levels. Now, I'm not saying that that's what's going to happen this time around, but I do think there is some strong resistance here. Now, it is possible for crude prices to break and continue to move higher. That's why it's so important to utilize the proper strategies to try to take advantage of these markets. I've talked about in some of these posts here about looking at a ratio put spread here. And if you don't know what that is or you'd like to learn more, give me a call, shoot me an email. We can get into more detail, because that particular strategy, even with the market moving up here, could possibly be an appropriate way to take advantage of the market. So, obviously it does involve an amount of risk, as futures trading does, and it might not be suitable for everyone, but it can potentially take advantage of some real nice moves. So give me a call, shoot me an email. We'll get into more detail.